Hey everyone, time for another review. And this week we had the beginning of a long-awaited pullback. Uh, but let's look at what happened a bit and I'll talk through it and draw some conclusions. So this is the heat map of the week, and we see mega caps dumping, tech in general kind of dumping. We see some of the overperformers like LLY also dropping. Uh, I'm assuming it's because they're in the tech basket, things like LLY and Costco. And they actually dropped because they are bundled together with tech. We had a bit of a short squeeze in IWM, and this went way for higher than I thought. But it is what it is, doesn't matter that much. But it seems obvious now that the market has a long tech, short small caps position. And this squeeze here is what caused the drop in tech. Uh, and it's visible here. But tech is it's not necessarily tech. Like I said, I think things like LLY and Costco are part of the tech basket, and it's obvious from the way they move. Uh, and it's not really relevant what the ticker name is and what sector it's in. If it's bundled together in the thing with the things that have been going up like crazy this whole year, they will be reversing now. And there's an aspect here that even though most things went up, it doesn't really mean they are bullish because of the squeeze aspect in the IWM. Like things like more shorter stock went up. Lots of things that have been underperforming went up quite a bit this week, and it's visible here as well. But I think the real news is uh, move towards a recession trade for the market. I think beyond the short-term short squeeze, there are things that are real, and those things, in my opinion, are financials, healthcare, and consumer defensive staples. And it's visible more or less in how they move. Like we have UNH going higher a lot. We have Johnson and Johnson's. We have PFE, uh, BMI, Guild, and other names as well. In healthcare, banks did well after earnings, with a couple of exceptions. I mean, I think only Schwab. And consumer defensive with Coca-Cola and Pepsi, KDP, did well as well. And I think this is going to be the theme moving forward. What I think will happen is we continue correcting, uh, and target for me is VIX 2023. I have this thing that I posted on Twitter yesterday. We had this ghost print in December 23. This was um, this was my target for the eventual correction. When we got it, it became the top in the VIX. It wasn't the low in price, because that's one of the things I learned for the next time is the echo move is the top. So basically this went high, then corrected, that then made a lower high, but price on the other hand made a lower low. So I will take this for this time as well. Then we had this ghost print in May, much higher, and I think this will be the target in for this correction. In VIX itself, this should be around 23, 23, 24, something like this. We should be hitting it. But recently we had a couple of ghost prints that point to lower. And I think that after we go here, we will uh, target this ghost prints here. And this will make the bottom that pops the bubble. The top that pops the bubble, the bottom in VIX. And yesterday we had somewhat confirmation by this ghost print at 1062 for VIX. Even though it didn't trade here, somehow we got this ghost print and it's telling us what the target will be on the downside. So expectation is we go to 23 VIX, we make a bottom, then reverse. And what does that mean? It is all this long IWM trade will be unwound. So IWM will start outperforming again. This was just a fake move up. It will get rejected, probably go and make new lows relative to this for sure. But let's do IWM here. I think it goes below this trend line, like below 196. I think it goes to 180, 170, something like this. We'll see. Um, but the exception will be the defensive sectors, meaning financials, healthcare, and consumer defensive. And besides this, mega caps will make a resurgence, because if tech starts going up again, then because the basket is long tech, short small caps, then the trade will work together. Not just, it cannot be tech up and small caps up. It will be tech up and small caps down. Otherwise, it just doesn't work. So we get small caps underperforming again. And for the tech, I mean mega caps. And just like in 2021, we had tops for many of them in November, and the actual what is perceived to be the top of the that bull phase is actually here, like January 4th. So we topped here, and then we continued going down. I think the market has stopped in this way as well. What's this? November 22nd. So let's go to SPY and let's look at November 27 here. So SPY basically topped here in this area. It was actually a bit earlier, like November 22nd. Isn't that what I... Oh no, 22nd. That was the correct one. I thought 27th. Anyway, so this was the market top. We had a correction, and then we went higher on the index level. I think this will happen again, meaning the index will go higher, but some of these names will start underperforming. Uh, Not necessarily these names, like we can talk about semis. For example, AMD. AMD will not see new highs. SMCY. SMCY will not see new highs. Who's underperforming here? Netflix probably won't see new highs. Like this looks like a top. Meta looks like a top. They can go back higher, but they won't see new highs. This is what I mean. Microsoft being one of the leaders together with Nvidia, probably see new highs. Amazon, probably no new highs. Google, I don't know, somewhere between Microsoft and the ones that won't underperform. Apple, I don't know. Tesla probably won't see new highs. Very likely that this was a top for Tesla. We'll see how they do for earnings, but I wouldn't be surprised if Tesla starts going down again. So this is the point I'm trying to make. Like tech will go up, but it will be represented by the generals. And Nvidia has to be the last one to fall. Nvidia very likely will make new highs, potentially even substantial new highs. It will depend on earnings, but they have the earnings very late in the cycle. So we shall see. We shall see then. But I think we have entered distribution, and the reason why mega cap tech will go up as a defensive play is because they're safe havens, especially Nvidia. So these financials in general are considered to be a safe haven in type of times of recession. Healthcare is considered to be a safe haven, and consumer defensive is safe haven. By their name, by definitions, is a defensive sector, because people buy Coke and Pepsi even during recessions. That's the reasoning behind that. Uh, The strange thing, for example, for healthcare, is the fact that LLY is part of this basket as well, and it it might underperform like XLV. XLV had a breakout. This should stick and should go higher, but might not perform that well considering that LLY is part of that basket, and there's a good chance LLY has stopped as well. Like it can go up again, but I don't think it will make new highs. It won't go above this level. Most likely it will do something like this. We test the trend line, double top, maybe a bit slower, but do it like something like a double top here, and then it will break down. This should look like I just put to sell on on Twitter. It should look very much like this, like a double top like this for LLY, and hence the distribution call. Okay, this being said, let's we have to talk about buying the dip, and I think we still go a bit lower. It's hard to evaluate how low. Basically, I see two scenarios, both of which will lead to a bottom relatively soon. One would be uh, what did Friday look like? Like minus 66, minus 89, 0.51, 0.93. So I would call this a mild red day. Um, if it was 1% plus a moderate red day, if it was 2% plus a bad red day. So I think one scenario is we get a couple of this type of one or two more mild red days like this, and then either bounce or capitulate. But if we capitulate, it's going to be a debuy. It's going to reverse intraday. Let's see how close this ghost print from 540 is. We are here, another 1.5%. So basically another 2 days like this should get us here. And then we get here, and by this time we'll probably be in the earnings phase. Next week we have Tesla, Google. So we have Tesla next week, Apple is not next week, Nvidia not next week, Google is next week, 53. August 1st is not next week. Microsoft is next week or not? Not next week. So we only have Tesla and Google. Seems so. Okay, back to SPY. Those two are enough. Anyway, doesn't matter. I mean, it matters, but it doesn't matter that much. So let's go back here. We have continuation down, uh, even though we can see a bounce, a short-term bounce here. Um, we have continuation down, we get about here, and then those earnings come. And those earnings should either give us a bounce directly or a capitulation day. A capitulation day means we drop a lot in a single day, but most likely gets bought. I wouldn't be surprised if we get the capitulation day to briefly go below 530, then it gets bought, and we probably close like 535 plus, as high as 540. Wouldn't this whole thing can be a single day, and that would be like 243, 44. Uh, so this is kind of what I'm thinking will happen. On Qs, this will be more. So I posted it here like a capitulation day, and it's only 2%. But for Qs, this can be a lot more. Uh, Shown the daily, not 400. Probably here, like 440 this area here, like 440, 445. I have this trend line here. Yeah, about here. So 445 would be a target for a capitulation day. And that's another 6% down for relative to Friday's close for the week. It won't happen all at once, but let's say we go to 465-ish, and then before that. And then we have the rest in a single day, which is like 3-4%. It's even 4%. So yeah, this is kind of how I see it playing out. Because tech is the leader, tech has to drop the most for us to get a capitulation low, and then it gets bought up. And I'm assuming everything will get bought up from tech, or relatively speaking, everything. But this is when the time when you buy Nvidia for the big bounce. Nvidia probably goes to like 100 if this happens. This gap here, 110 is very. I think about here is fine. 100. So minus 14% relative to Friday's close. And it holds the trend line, is still bullish, and Nvidia can actually go higher from this if it drops like this. On the other hand, if earnings are good, most likely we have 110 as support. Like I think we continue dropping a bit, but slow drop, then big drop, or just slow drop and bounce. Okay. As to what I think are good plays, UNH, I had the breakout. It's doing a small pullback. I still expect this to go down, to not to go down, to continue going up. It's not showing actually bearish patterns. It's more like a consolidation here. It will go up again. What didn't happen is the push to 600 that was supposed to happen by end of week, but because the market was very weak, it wasn't very strong either. But still, relative strength compared to the market. The market was down significantly. This only briefly went down. It closed green yesterday, and so on. GNH, same kind of situation. This was weaker yesterday, but minus 0.47. I think it will hold a breakout and go higher. PFE, I think it will have a horizontal breakout here. BMI also looks strong, like it's trying to go down. It got rejected by this AVWAP, but it's clearly making higher lows now. And if it breaks this AVWAP here, it should go to at least 48, if not considerably higher. We'll see what earnings brings as well. Might bring it down again, but I cannot predict earnings. Then we have banks. Horizontal breakout, still looking okay, like it didn't break the uptrend. And I think as soon as the market uh, starts going bullish again, nothing really bad will happen. The only bad one was Schwab. I would not buy the dip in here. So in the last stages of the cycle, you don't want to buy relative weakness. So if you go with something, go with outperformers, not underperformers. So I think even if it has potential to bounce a lot here, it also has potential. That potential is basically volatility. Volatility can go both ways. The same potential that can take it like from 62 to 67 can take it all the way here to 53 as well, very easily. So it's not worth the risk. And this has been true basically all year. The outperformers have continued outperforming. It's even more true in the last days of the cycle. So if you want to get something, probably Nvidia longs is not too late. We still expect Nvidia to have a large bounce because it will appear very cheap at 100, and people will jump in. It will do a low volume squeeze, and so on and so on and so on. Just looking at banks. So for banks, go with the outperformers, the big cap ones like JPM, Goldman Sachs, Citi, I don't know. I still like MasterCard. I still like Visa. We'll see. Visa is the first to report next week, and Western Union. Even though they pulled back a bit here uh, the, on the market underperforming as well, I will still say they have relative strength, and I expect them to make a move higher yeah, eventually. And for consumer staples, we have Co. Also holding the horizontal breakout. We'll see what they do on earnings, but this should have momentum, and I think it goes significantly higher unless it has very poor earnings. Um, this breakout is legit. PEP also doing okay, retaking this horizontal level. Walmart new highs probably, like it's respecting this, but it's actually going higher and might do a surge up soon. Target underperforming here. Horizontal level. This one is a long if it breaks 166. And if it does something like this, it should go to 176 if it can take this level out. For now, it hasn't, but I think it took the AV up from the high. Now it got rejected by it. So if it goes above this level and recaptures the AV up and sticks above it, it should be quite bullish. Moving averages. It's on the combo of 20 and 50, so we should be seeing this bounce here. And if not at on the 200 MA at 144, probably if it doesn't hold here, it will hold at 200 and attempt to break out here. Might get rejected, but it should attempt. So a buy on target on the 200 MA is probably fine if it doesn't hold here already. Yeah, that's kind of it. GNH on, I looked at it already. This is pretty bullish, like it recaptured the 200 with an impulsive move. It broke above the downtrend. It looks strong. But make no mistakes, this if we get a recession, it's confirmed, and the market goes down because of that, this too will go down. But for the next month or so, the expectation is that they will not overperform relative to market, and the other ones that would overperform are probably going to be some of the mega cap techs because they're also defensive from the market's perspective. What I don't think is bullish is oil. And I think the move up in oil was fake. We saw on Friday the minus 3% day. Um, and the reversal here. I suspected the move on oil is fake because they look kind of shitty, like except for some, nothing is really close to the highs. Like Chevron, it's in a downtrend, visible with the naked eye. Shell is pretty high. BP is near the lows. PBR near the closer to the lows than the highs. Uh, MRO is pretty okay. Oxy again not close to the highs. Devon not close to the highs. Fang is okay, but probably turning down. Like look at this. Holy shit, this one is probably a good short. Look at this shit. We found a good short on oil. Like this. a bit lower. Why is it not snapping? Anyway, whatever. So we try to make a new high. We have a very large bearish divergence, and this will probably go down. Something like this. Then we see. So yeah, that's the idea here. MPC super low. Yeah, I think the move up, this was just a squeeze, a short-term squeeze, and it will resume the trend of going down. Then positioning wise, still work in progress for this. Is not really, it will look like it would look like this when it's done for positioning, and you'll be able to scroll back and forth. But this is you should be looking here at the bottom. This is the difference between positive breadth stocks and negative uh, breadth stocks, and we have reached a threshold for a pullback. Uh, we are very far from a bottom. We are still in like 52%. We're still at 53% positive. View freeze one row. So even though we pulled back a bit, we haven't really dropped. Like we have had pullback starting from this level. So to actually get to a level where we can expect a bounce, we have to go much lower. One of the reasons why I think we will not see uh, a bottom yet. And uh, what can happen is we go back up and then we do another correction. Like let's assume we bounce here. It would be something like this. We bounce, we retest the high, and then we go down even more. So I don't think it's possible for us to bounce quite yet. But we shall see next week. A good bottom is at least in the negative. So we need to drop a bit more to get in the negative zone to allow a bounce. A good one, the difference is around minus 40 here, and yeah, that's kind of it. We are not in a situation where we can expect a bounce, and if it does come, then we should expect another correction relatively soon. It would be at max a retest to the high, and then we go down again because we're still way too overbought and we haven't really corrected. Okay, I think that's it for now. Hope this helps. Have a good one. Bye bye.